Hello, everyone. I am so excited to welcome you to this Meet the Managers event by VC Lab. Let me introduce myself. Let me introduce VC Lab. We'll give everyone a moment to stream in, and then we'll get started with the exciting discussion that we have for you today. So my name is Adeo Ressi. I'm CEO of VC Lab. I'm also executive chairman of the Founder Institute. So I've been working in the startup ecosystem for over 2 decades, and I just know a lot of stuff about a lot of things. Really excited to have everyone here today and meet some amazing new venture capitalists from all around the world. VC Lab, which is hosting this event, is an accelerator for venture capital firms. So we take in managers from all around the world. We took in about 200 firms in cohort 6, which is midway through right now, and we're recruiting for cohort 7. And we put them through a 4-month intensive process to launch and close a venture capital fund. So a lot of people start the program with an idea for a venture capital fund, and then by 4 months later, they're in a position to call capital and start investing. Now, sometimes it takes 5 months, sometimes it takes 6 months. The average time for a participant in VC Lab to close a fund is about 5 months from the beginning of the program. And this next cohort, cohort 7, is going to start in June. We're going to conclude enrollment in May, so in a couple weeks from now. And the goal is that everyone in cohort 7 will have a fund operational by the end of 2022. So the summer is a pretty difficult fundraising time. So what will happen is you'll do a lot of legwork on your venture capital firm and on your venture capital fund over the summer, when fundraising is difficult. And then you're going to come into late summer and early fall and really pick up fundraising in cohort 7 so that you could close in October or November of 2022, and you will have a vintage 2022 fund. Now, I see lots of people are coming in, which is great. So hopefully you heard a little bit about VC Lab. Let me talk a little bit about the event today, and then we'll get started. So first and foremost, there's a chat down at the bottom. You can please share your LinkedIn details, introduce yourself, do all sorts of chatting in the chat, meet all the people that will be here. We had over 400 people register for the event today. My guess is in a few minutes, we'll have well over 100. These are amazing people, limited partners, general partners from all around the world. Use the chat to introduce yourself, talk with them, meet new friends, meet new acquaintances, etc. There's also a Q&A button. If you have questions for me or any of the amazing panelists that we'll get to introducing in one moment, you can post it in the Q&A. There's a thumbs up button in the Q&A as well, and we're going to get your questions on screen for sure during this. So make sure to ask them in the Q&A and upvote them, and we'll go through the upvoted questions first, and then the rest of the questions later. So if you have questions for anyone, put in the Q&A, not in the chat. Okay, so the event today is called Meet the Managers. All right. This is one of my favorite events because you're going to meet some of my favorite people, which are managers who recently completed VC Lab cohort 5. These managers hail from all different backgrounds and have a lot of exciting things to share. And they're going to talk to you about their experiences really going through the VC Lab program and working to launch a venture capital fund. And so you're going to get firsthand insights on what it's like to launch a fund, what it's like to go through VC Lab, etc. So without further ado, we're going to do introductions. And rather than me introduce them, which is, you heard enough of me talking, we'll go in order. We'll do Oran, Pankaj, Matt, Sriram, and Pavlos. And we're going to start with Oran first and then just keep going around. Oran, take a moment and introduce yourself.
Thank you. Good morning, Adeo. And first, thank you. Thank you for hosting this, and thank you to VC Lab. I think we're all pretty excited to be here and to have been through the program, which was really spectacular. So my name is Oran Olonichiris. My origin story, briefly, is that I'm actually a doctor and anesthesiologist, and I've been in practice for 30 years, now retired, and full-time involved in venture and innovation. And I was exposed to venture capital early in my medical career and found it to be really fascinating and important. And in medicine in particular, we are awash in innovation, and venture capital is really one of the most important drivers of innovation in healthcare. I'm based in San Francisco, and we are really excited to be here.
Hey, Adele, thanks so much for doing this. I'm Pankaj, and I spent most of my career, or early part of my career in finance, Wall Street, mostly in technology and operations, and that kind of led me to becoming an entrepreneur. And I moved to India in 2007 and started a company. It didn't go so well, but got involved with a whole bunch of other things, and been a VC for a couple of years, been angel investing for quite a while, and love to roll up my sleeves and help entrepreneurs that are looking at SaaS, enterprise, and analytics types of companies.
Thank you, Adeo, for the invite. So I'm Matt Gunter. I'm based in Mexico and predominantly working with Latin American companies, supporting them in their journey to success. So we've been working with startups and investors for the past 7 years, past 5 years also in VC. And in 2019, co-founded Lotux with the aim to really invest in pre-seed companies in the region and help them grow.
All right, next. Hey, Adeo, thank you for having me here, and thanks to VC Lab. My name is Sriram. Hi, everyone. I'm based out of San Francisco. I'm actually San Jose, actually. I've been involved in the startup ecosystem for over 15 years as a mentor, as an advisor, as an entrepreneur. In 2020, I co-founded my latest startup, Hyperstack, in the blockchain space. I'm very passionate about SaaS and being born and brought up in India. I actually have the opportunity to go back, and during that time, I met with a lot of founders who inspired me a lot to actually explore the space. And I have built a startup ecosystem that connects Indian entrepreneurs to the US market. SaaS has a big market here. If anyone of you is interested to learn more, and want to connect with me, please feel free to do so. Really excited to be here and share my experience, as a VC. Thank you.
Hi guys, I'm Pablos. I'm a hacker and an inventor who worked on a lot of deep tech projects in my career. I helped start Blue Origin, which is a spaceship company. And then I built a lab with Nathan Myhrvold to do a lot of deep tech invention projects and start new technologies. And so my whole career has been working on advancing new technologies that can solve big problems in the world. And so we have a new venture firm that backs startups doing just that kind of stuff. And so if you know any mad scientists with crazy hair and a DeLorean in the garage, send them my way.
Sorry, I was muted. Does the DeLorean need to take garbage to time travel? Is that like a prerequisite?
I mean, if you have one that can do fusion out of some garbage, I would love that. But we'll take what we can get to start.
So let's reverse the order a little bit. And again, if you have questions for everyone, pop it in the Q&A. But I have a question for all of you, which is, and we'll reverse it. So we'll start with you, Pablos. But besides finding the DeLorean that eats trash and takes you to the future, what inspired you to explore venture capital as a career? And we'll go in reverse order this time.
Yeah, sure. I started a lot of companies. I had a lot of projects that I wanted to get off the ground that were technologies that were a little too early for the venture community to internalize and accept. And so a lot of times I had trouble getting support for them over the years. And I also saw that other, venture capital in general was aimed a lot at software, and it wasn't getting to a lot of the technologies that I think are really important. And so to scale them up, we're really going to need to get venture capital that is deployed towards deep tech. And I think now is the time to do it. And there's a lot of good reasons for that, but that's what got me going.
Awesome. Shiram?
Oh, thanks, Adeo. Like Pablo's mentioned, I met with a lot of founders from India, and I kept hearing the same thing. Access to capital is so difficult. Getting meetings with VCs is difficult. And having gone through that problem myself, I said, how can I actually make sure I can help, the ecosystem, that exists in India, and also like make it a super ecosystem and make it more connected. So that inspired me to look at avenues that I could use. And having been a startup mentor and advisor, helping startup with business development and market access in the US, I thought of myself as a bridge. And that's what inspired me to actually even start my fund.
Matt?
Yeah, so I was always interested in entrepreneurship. So my father founded a company. I studied small business management. And I mean, I was always also interested in, making the world a better place. So I worked in a charity for a while. So I didn't see that it deals with the underlying problems. And I saw entrepreneurship can be a way to impact people's lives in a positive manner, in a kind of way, just really people helping themselves in the end. So that got me really excited about working with the startups, accelerators, investors. And I really wanted to get to the investment side of things because that's where I think it's also a lot of action happens. And after working in VC for a while, it was a kind of a natural evolution of I really saw a lack of VCs that would help very early stage entrepreneurs and really want to get, let's say, dirty with them, help them to really get to the next level, invest early, be a believer and supporter of them. So it was a kind of a natural evolution of going to the VC world as well.
Don't wait for me to call your name. Oh gosh.
I just unmuted. Yeah, no. So my journey was a little accidental and convoluted. I started my career in technology and operations on Wall Street, and a lot of the companies that I worked with early on in my career were, today we would classify as fintech companies, but back then they weren't anything. They were just there. And when I moved to India, I was doing a startup, and at that time, I didn't really know anybody across the country, and I couldn't hire people easily. It was really tough. Forget about funding. Like, just hiring people was really, really difficult at that time. And nobody wanted to work for a startup. The only people who worked for a startup were folks who couldn't get jobs at Infosys or Microsoft. So part of that journey led me to start building communities around entrepreneurship. And that led me to build a very big network across the country of entrepreneurs. And a couple of folks realized that I had a pretty strong network of entrepreneurs. And I got connected with the largest media company in India called Times Group. And they were launching an accelerator program and asked me to come on board to help them with deal sourcing, essentially. And that's kind of how I fell into venture capital by mistake.
That's awesome. Oran, last but not least, Dr. Gone VC.
But that's relevant because for me, VC started as just a puzzle to solve. How do you get capital to companies and make them grow? But what made it really personal for me was when I found out that one of my friend's children was suffering from a pretty serious illness that had a very high mortality, and they had exhausted their treatment options. And I was able to go into the network of startups that I created and find a company that was working on a solution that could theoretically help her. That was like a light bulb moment for me, because this company was struggling to get capital. They had something that really made sense and could help this young woman, and they couldn't get there, and they needed help. And so for me, that was really the moment that inspired my passion, made me realize we could really help people and make a difference with venture capital.
That's a beautiful story. Actually, all were beautiful. There's someone asking about your laser mosquito thing in the questions, Pavlos. Can you apply it to other tech? Did you invent
Yeah, I've actually
the
seen
laser
the.
that's the mosquitoes?
Oh, geez. This guy is a entrepreneur who I've actually heard about before. He built a robot pill that you can swallow that.
Yeah, Tori's
So-
a good friend of mine who asked
Okay,
the
cool.
question,
Well,
yeah.
we have a lot of affinity for robots. Yeah, he's referring to an invention I worked on years ago called the photonic fence. And the idea is it finds mosquitoes and then shoots them down with laser beams as a malaria intervention. And that's super fun. It ended up being the kind of thing that we thought would eventually become economical because of Moore's law. It turns out Moore's law doesn't apply to lasers. So everything about it got cheap except for the laser. And so it works, but it's still too expensive to use the way we want in sub-Saharan Africa. But he asked if we could modify it to go after ticks, and ticks are like in a beehive. Those are different. Those are a different problem. Our device uses the wing beat frequency to identify the bug, so we can find all the bees and not shoot them. But ticks don't really have a wing beat frequency usually, and so we'd have to use a different mechanism for finding them. But these days it would be pretty easy with.
We just went super geeky, by the way.
Oh yeah, sorry. Okay, anyway, enough of that. Yeah, so awesome.
Let's go super geeky.
Save bees.
Speaking of questions, you can ask super geeky questions if you want, and you'll probably get super geeky questions like the beat of the wings. Here's what I recommend on questions. I'm getting like multi-part questions that are like 3 paragraphs long. No, that's not going to happen. Like a question that I can read relatively easy, 1 question per question. Also upvote. So I'm going to do a good question that's come in, and you upvote by doing the thumbs up. And then I'll get back to some general questions for the panelists in the moment. But Mark is asking, any actionable tips on how to de-risk the fundraising process? And I mean, everyone who's raising a fund is fundraising. And I can tell you, just as someone who's seen a lot of it, raising for a venture capital fund is one of the single hardest things you can do. It is certainly the hardest fundraising that you can do. Limited partners are not like out there with a website like, hi, pitch me. You have to like dig and find them. So when questions come in from the chat, everyone, just if you want to raise your hand or indicate, and I'll kind of let people go as they wish. But does anyone want to take the de-risk the fundraising process question from Mark? Any tips on that? Pankaj, you can go first, and then Shriram second.
Thanks. Yeah, fundraising, I think, for a fund is a lot harder than raising money for a startup. And there's a lot of reasons why. I think the best thing that you can do is, even if you are an experienced investor, having some guardrails. And I think, for me, VC Lab were those guardrails, really kind of laying out a map for me and pushing me down a certain stream was really helpful. Also, start your conversations with folks that are friendly, that could potentially be LPs, but more importantly, could connect you to friendly LPs. Start that process really early, even before you have a fully baked thesis. Start talking to your friends and start building that interest and involve them in that process. The more of your friends that get involved in the process, I think really helps them get excited about what you're doing. And a lot of people that may not even be able to write the minimum check size will suddenly raise their hand and say, hey, I really love this journey that you're on. Could I put a small check in? And it opens up a lot of doors. I would say start that conversation really early, and VC Lab is really helpful for me.
Yeah, I would. Can I just double click on that 1 second? Sorry, Shriram. Like, if you're thinking to launch a venture capital firm or fund, the sooner you start talking to just people that you know and like about it and getting their feedback and seeing if they know anyone, the better. Because those type of connections into limited partners could take a few weeks or a few months to cultivate. So the sooner you start, the better. Shriram?
Yeah, thanks, Adeo. And I second Pankaj on everything that he said. The one thing I would add is, for me personally, from my experience, I can share that if I had actually gone through the whole process of just starting the fund by myself, it would have taken me twice the time that it took, right? So you want to make sure that you are, you have the momentum to close. And this is something that both Adeo and Mike, in the early conversations that I had, I remember you mentioned momentum is going to be very important. And momentum in fundraising and like making sure you can have your investors lined up is important. I don't want to discount the fact that, even though you raise money, you still got to invest in like valuable assets that are going to give the returns to your investors. Because when you go and ask money to your investors, and like Pankaj said, it's not like you're getting money for a startup. You're actually getting money to invest in assets. And so your investors are going to have these key questions. This is where I think the VC Lab program really changed my mindset and made me comfortable with actually asking the hard questions myself. So I'm convinced, so I can go and convince my investors.
Oran, and then there's another great question from Dan, and then I've got a question for everybody, and then we'll turn it back to questions from everyone out there. Oran, go.
Yes, so real quickly then, I think one of the challenges is that as an emerging manager, you don't necessarily have a track record. And that's going to really be I think the ultimate de-risking is the fact that you've done this before and you've had great results. And obviously, if you haven't, you probably shouldn't be doing it again. But as an emerging manager, we don't really have that advantage. And so my recommendation would be that either you look at personal investments and tell a story that you've, around the way you approach these investments and what those returns were like, or you just put together sort of a shadow portfolio of companies you've looked at that you'd like to invest. And you basically give investors an opportunity to get eyes on how you would approach the investment.
We've got a great question from Dan here. Maybe the other panelists could take a stab at it. For any panelists, besides fundraising, what's the overall most challenging aspect of building your fund? Thanks. Like everything? I don't know. Matt, do you want to go, or Pavlos?
Yeah, awesome. So I think one of the things that I think also VC Lab helped us a lot is just generally navigating a lot about the structure of what to do, what not to do, the regulation of what you can say, what you cannot say, how to approach people, how not to approach people. I think that's also part of, let's say, the general advice that we get. So I think that's also one of the hardest things. And I think in the end is also really just validating your thesis. So like seeing great opportunities, seeing great investment opportunities that will make returns for your investors, even though you might be able to convince investors, but if you cannot really make returns, it's going to be very, 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 let's say, fast journey, and you're going to finish the career pretty soon. So really getting people excited about the thesis, getting really early on with good investments, get some markups, and yeah, take it from there as well.
Can I double click on that? Guys, every minute you spend working on your thesis is valuable, because until it's real, and if anyone disagrees, you can speak up, but it's like, it is really worth investing a lot of time in your thesis, Matt was saying. The other thing he said of do's and don'ts, and I've even seen this happen in the chat right now, okay? General solicitation is illegal or regulated in most of the world. So you can't actually go out there and be like, I'm raising, if you've noticed, no one here has told you the size of their fund or any details, because they're not generally soliciting. They're talking about their experiences, blah, blah, blah. So I've been seeing people posting in the chat, like, my fund size is this, my sector is that. That is not allowed in most places. And if you want to do it, you have to abide by certain rules and regulations. So just being sensitive to these things, knowing what the rules are is super important. Pavlos? And then I have a question for everybody.
I think for me, one thing that coming into it that was different is, we have a lot of folks starting funds who have some experience either investing in another context that they can sort of translate that to a venture capital approach, which is, I guess that's partly true for me, but that's not really what I'm using to build my venture firm on. And so the really important thing for us was, around differentiation for our brand, for what we're doing, and really showing how that maps to our experience. And I think a lot of what I saw with our cohort in VC Lab is a lot of the managers struggled because they really weren't differentiated enough, and that made it harder for them to stand out in their fundraising process. So I think this kind of maps back to figure out your thesis. When you're doing that, try to figure out what you are uniquely good at and what you can do well and what's different and what makes you special and because there's plenty of places, there's plenty of venture funds, and VC Lab's making sure there's plenty more. So there's plenty of options for LPs coming, and what you want is to bring them something special and show them that you're going to get the founders that are going to make a difference. And so I think that finding a way to do that is really important. But just to double down on what everyone else said, like I wouldn't be here without VC Lab's help. I'd be a third of the way along this process because they had so much structure and helped me focus on the things that I should do instead of whatever I imagined in the morning. So that's been really helpful.
Thank you so much. And I want to double click on what you said. Actually, great segue into my next question, which is find out what makes you uniquely special. And then that's the basis of your thesis. That's such great advice. And, then no one can copy you. And don't say things that everyone does. Like, we do great due diligence. Like every fund does great due diligence. We thoroughly,
We don't. That's not one of our things.
Right. No. Well, no, it's like, I'm assuming that, if every VC does something, don't have it in your deck, right? It's like, we help our founders grow their company, check, so does everyone else. We do due diligence, check, so does it. Find the things that you do that no one else does and put that in your deck. Okay, speaking of which, now I want to go, and maybe we'll go in order now, Oran, Pankaj, Matt, Sriram, and Pablos last. Though you gave a little hint of that. What is making, what is getting you excited about markets or industries right now? What's inspiring you in the venture space that you want to talk about? And, you guys come from such different backgrounds. This is going to be very interesting. So, Oran, why don't we get started with you?
So for me, the healthcare market in general is really hot right now. We, fortunate byproduct of the pandemic is that it brought a lot of, eyeballs and then a lot of capital into the challenges of healthcare. And we've had a lot of major change that normally would take 10, 20 years happen, in a matter of months. So what's exciting to me is there's a real opportunity in healthcare to make significant changes. Particularly, we see a lot of things in robotics and in artificial intelligence, but even just in devices and therapeutics. So, we're just really interested in transforming medicine, and it's a good opportunity to do that.
For me, I've spent a lot of the last 15 years looking at India and seeing how India has been transforming. And, over the last 6 years specifically, we've seen a major shift towards digital adoption, through mobile phones. 500 million people are on mobile phones, on the internet now, and you're seeing more and more people getting online, payments becoming much easier. So India has been a really, really interesting and exciting opportunity for me, seeing the journey as an entrepreneur, as a community builder, and as an investor. So that's one market that I'm really, really excited about. You have 1.3 billion people, almost 1.4, and all of these people are aspirational. They're coming online, and there's a long history of technology adoption and development in the country, right? And that going abroad is really exciting. Like, for the first time, instead of hearing somebody pitch, oh, we're building the Uber for India, I'm hearing, oh, we're building the Kata book for New York or Kata book for Southeast Asia, right? Like, that to me is where you're seeing most places outside of Western Europe and the United States can adopt technologies that are being built in India for a different demographic. So that, to me, that's really exciting.
Yeah, really cool to see that, being present in Latin America and emerging markets in general, it always is the other way around, but now seeing happening, okay, we want to build, new bank for X, whatever, or we want to build something coming from the region and developed market. That's a really cool thing. So we are really being present in Latin America for past couple of years. I'm really excited about LATAM as a region. It's like 600 million people, it's like 5 trillion GDP. The smartphone penetration is really high, and the pandemic really accelerated the digitalization of businesses as well as digital adoption. So that also translated into a lot of new VC money, VC investment coming in. It was like last year was a record year, it was more like 4x than all the previous years, then 2020 as well. So one of the fastest growing regions in terms of the VC. And a lot of the capital we see coming in, it's for late stages. So less than 1% is for pre-seed. So, and the number of pre-seed deals in the region has largely stayed the same in the past 3 years. So that's where we see a big opportunity and a big need of really working with entrepreneurs, really seeing entrepreneurs that have experience in growing businesses, but maybe lack the structure, the help in really achieving that growth. So that's where we really focus on. So, and also in terms of the sectors, we're really excited about fintech. There's about half of adults that aren't banked in the region. E-commerce has had a really accelerated growth, mainly due to the pandemic as well. And a lot of habits are here to stay as well. Health, as already Oran mentioned, it's a lot of things that changed for a lot of people, especially in terms of adoption and how we serve them. And also, yeah, we see really great investors, international investors coming to the region that gives us more hope and support for growing their business and having follow-on capital as well.
I just want to, the pandemic is awful. Lots of people died. I lost lots of friends. But as far as technology, internet adoption, venture capital, it's been really an accelerant in so many sectors in so many areas of the world. All right, 2 panelists mentioned it. Sriram and then Pavlos.
Yeah, I'll probably add something quick here. From a focus standpoint, I'm really bullish about SaaS startups, and for a good reason here, like we discussed. But particularly, my focus on Indian startups has shown me that access to capital is very important, but access to markets is even more important. And so from that perspective, there's a huge market opportunity here in the US. 90% of the enterprise SaaS market is in the US. It's a $200 billion market plus by 2025. So that really excites me. I mean, when I hear stories about like how we want to actually develop great products, that's great. But how can you solve the market problem here in the US, and how can you actually make sure you can have a successful market entry? That excites me more. And if I can add value there, that's all the more exciting for me.
And you're helping bring companies from places like India to the US. Right. Pavlos?
I totally screwed up and started answering questions in the Q&A, so I forgot what you guys did.
You writing answers in the Q&A?
I shouldn't. I know. I'm sorry. I did the wrong thing.
Yeah, so we were asking about what market is exciting you, or what's getting, what things are exciting you right now.
Well, so I'll tell you 2 things. So one, I think someone addressed, which is that money has moved from public markets into private markets. That's making venture huge. That is awesome. One effect of that is it's causing all these startups that should exit 6, 7, 8, 9 years in, they're doing C, D, E rounds, and they're going to year 9, 10, 11, 12. So venture is extending on time, which is awesome for deep tech because sometimes our projects take longer. And that has been one of the big problems holding back deep tech, which is that, people look at it, they say, oh, it's hardware. It's hard, says in the name. So, they don't want to do it. They want easy software stuff. I call that shallow tech. So if you look at what's happening now, we have these macro trends that are really helping us go after, these projects that might take a little bit longer. And we talk to our LPs about that because, they need to know that, all their venture investments are likely to take longer to exit. So, the delta between doing software and doing what we're doing isn't as big as it used to be.
So what is the time horizon on one of your things? And while you think of an answer on that, just for everybody who's asking questions in the Q&A, we got great. I'm going to try and get through them now very quickly. So maybe one or two people ask questions that I pull. Do me a favor and upvote. There's a thumbs up. Click a thumbs up for questions you like right now. And so we can burn through lots of questions in the Q&A. But yeah, so what's your time horizon? Is it 15 years, 12 years? What do you think?
The rule of thumb in venture was always 10, but because venture just overwhelmingly focused on SaaS, we ended up with these very quick turnaround kinds of companies, you know, your Slacks and Zooms and things that really could get big fast. And so a lot of venture funds are looking for an exit in 5 to 7 years. Well, you know, you could do that with software pretty reliably, but you're not going to do that with, you know, lasers, nuclear.
Yeah, but
reactors.
how long for you, do you think?
So our fund is 10 years, and then we have 5 1-year extensions, and that just means
So
we
15.
might extend up to 15.
Yeah. Okay, we got lots of questions in the chat, lots and lots upvoting going on. Thank you, everybody. Keep the questions coming in, keep the upvoting going in. So again, I'll ask these questions, raise your hand. I'll call on you, maybe 1 or 2 people per question, and we'll try and get through as many as possible. So I like this question from Dan. Well, it's moving around here. How critical, if at all, is or was warehousing deals to attract LP investment for you guys? Who wants to take that?
I do.
Okay, well, you're Pablos, you can go.
I unmuted the fastest. Look, for us, I didn't realize at first that it was going to be important. We had been warehousing deals. We haven't even now, haven't really announced that we have a fund, but we have been able to attract a variety of deals that we're really excited about just because of a network. And once we started leading with those deals, when we talked to LPs, it really changed the conversation for us, because we initially would come and say, yeah, we're doing deep tech. And if you don't know what that means, it just means stuff that's not software. And we kind of explain it. And that, you know, that was okay. It went okay, but we eventually switched our deck to where, like, the first slide is warehouse. Like, we're doing this cool shit. And then from there, if you would get people excited about that, and then we can go into all the minutia of how the fund works and our backgrounds and all that stuff. But we lead with deals now. And
that's awesome. That's awesome. Let's give Matt and then Pankaj, and then we'll get to other questions. Great answer. Thank you.
Yeah, I really agree with Pablos. You know, in the end, it's really, if you're talking with investors and trying to get them excited, you know, you have to get them excited about you, about the VC in general, your industry, the market. There's so many things, you know, and a lot of things are still not so clear. And if you really talk about certain deals that you're excited about, why you're excited about, how you met them, it gives so much more clarity to the investors that what you're actually going to be investing in, what you're looking at. They can compare them a little bit more, what they've seen with other funds as well. And it gives you like more validation that you are in this for real. It's not like, okay, we're going to try this, we're going to do this. It's really just something very concrete that you can show. And it's very important for the LPs of not talking just about the ideas. It's really, okay, this is what we're doing, this is what we're excited, and we're going to do it. So better on hop along, join our fund.
Pankaj?
Yeah, no, I agree with everything that Matt and Pablo said. I think the difference here is that if you haven't been an investor in the past, you don't have a track record, you really don't have a thesis that you've built on, you need to warehouse deals. You need to be able to show that you can get access to those deals, and you need to be able to show that founders want to work with you. If you've been an investor in the past, then the track record really does help carry that, and you don't have to do as much warehousing. So that's it.
By the way, I am loving this. I'm watching the chat. Everything's going great. So I appreciate everything that and everyone's contribution. Okay. There's a question here with a lot of @ signs in the name. So I don't want to try it. And it's a tough name. So if your name is easier, I'll say it. For solo VCs, how did you address the key man hurdle with LPs? Who wants, Pankaj, if you put your hand down, we'll give someone else a shot. Pablos, let's give that one to you.
I think what they're referring to, if I understand the question correctly, is in an LPA you have, or in any company actually, you often have a key man, which means the investors are coming in because of this person. And if you
We
lose
call
that
it the
person-
key person, not the key man, but yes.
Okay. Yeah,
So
it's been updated to be politically correct.
Yes.
One thing I noticed, and so I think the person asking this question might be thinking, well, what LPs might be nervous if it's a solo GP. The reason I want to answer this is I have the opposite issue with some LPs, which is that they prefer to invest in a solo GP. And the reason is, if you've ever had a partnership, like a 50-50 partnership is literally like the worst type of decision-making structure in the world, right? And they fail the most, and people have falling outs, and you have no tiebreaker. It's like an autocratic dictatorship is the most efficient. Democracy is pretty far down as far as efficiency, and 50-50 partnership is the worst. So that kind of thing is something you need to navigate. You really need to, figure out how you're going to convey if you're not a solo GP. If you are a solo GP, then one of the reasons they're performing so well in venture overall is that they don't have to argue with anybody, and they can be efficient and make fast decisions. So
Aaron is asking, how do you see the dynamic between the classic VC funds, early stage funds, venture studios, et cetera? Are you seeing any trends here, right? So, I mean, I just to start, anyone can raise their hand on this one as well. Okay, Shriram, I'll give that to you. I'll throw something out in this regard. We're definitely seeing and I forgot if it was maybe Pablo's brought this up, but there's a massive shift of money that was in the public markets and this and that moving into venture capital because it's the single best large asset class in terms of performance. For the last 3 years, it also is projected to be so for the next decade by many research organizations. All that money coming in, a lot of it's going to big funds, the Andreessen Horowitz, Sequoia, whatever. But a lot of it is also going to new entrants, new managers, emerging managers, et cetera. So there's a massive explosion of venture capitalists around the world. And then I'll pass it off to Shriram too, and then Oran.
Yeah, I think thanks for bring this up. I think one of the things that's happening is the nature of rounds are actually shifting upstream. So which means that now early stage funds, you actually are going to be participating more with other funds early on, right? So there's always room for more, and there's always room to collaborate. This always used to happen before. Now, seed has become pre-seed, right? And pre-seed, an angel, has actually shifted. So that gives a lot of opportunity for fund managers, including new fund managers. So, if the question is, hey, are you afraid that, YC is actually opening up $125,000 and giving $375 more? I don't think it's a cause for worry. It just shows that there is market opportunity that they are coming after, which validates that there is market opportunity in early stage funds for you to focus on.
Oran?
So this is going to be a little nerdy, but I think you have to recognize the dollars at play. And when you have $1 billion fund, you're not writing $500,000 checks. There's no economic benefit to that. So you're writing, $100 million checks. So as an emerging manager who writes, $250,000, $1 million checks, we're playing in a very different field. But what we are doing is we're creating an ecosystem that buoys the companies that then gets to those larger entities. So we don't compete with those large funds. In fact, they don't come in our rounds, and we have access. In healthcare, they're afraid of those rounds because it costs too much money to invest in them.
Yeah, I would say that I think there's definitely this renaissance in early stage that's happening right now. Dr. Hector is, and sorry, I don't want to mess up your last name, Girour, is who are your looking to be your initial partners? Friends and family, angel investors, family offices, et cetera. So I can tell you for most new managers, even emerging managers, so new managers are fund one. Some research organizations also say it's fund two. Emerging managers are, fund one, fund two, fund three, but leaning a little later, usually fund two and fund three. And then when you get into fund four, you're out of the emerging manager bucket. A lot of LPs don't do new managers. So corporates are iffy. Sovereign wealth funds are mostly no. Endowments are generally no. Pension funds are no. So your classic, like, who invests in VC actually don't invest in emerging managers, and especially don't invest in new managers. So with that said, I'll pass that. What types of LPs are you talking to, broadly speaking, without getting specific? Who wants to? Pablos, you're writing an answer, so we'll skip you on this. Who wants to take that? Pankaj, we'll give it to you, and maybe Matt, since you haven't gone, and then we'll keep going with questions. Keep those questions coming in and uploading. Pankaj?
I think the best place to start is friends, coworkers, people that you might have worked with in the past, people that know you, people that you've built relationships with over time, because those are the people that are more likely to bet on you and give you some money to get started, right? So take a playbook out of the entrepreneur playbook and say, hey, I'm going to go reach out to people that I know, people that have worked with me and trust me. So start there. And then, it comes back to them getting excited about what you're doing and introducing you to other people that they know. And they're implicitly vouching for you when they're making those introductions. So, build that chain out early.
Yeah, everyone you pitch, you need to ask, is there anyone else you think I should pitch? Just build that in, burn it in your mind right now. Matt?
Yeah, I really agree with Pankaj. In the end, it's really similar to raising for a startup. Really go with the people that have high confidence on you. They're going to invest on you. Then really just friends and family at that point. And then really try to grow from there. And in general, individuals, high net worth individuals, sometimes family offices would be interested in emerging managers. But really getting with institutional investors, it's very hard, because normally you don't fit with the track record. You have smaller ticket sizes that they generally write as well. So it's really just going with individuals that are bullish either on you or on the asset class or on the region, or on the industry, something that helps build trust as well. And going through connectors that help build that trust is always valuable.
I'm going to save Krishna your question for last about VC Lab, because it's going to make me blush and things. What kind of profile should a VC manager have in terms of previous experience and track record to have the best chance of fundraising for his or her first fund? This is from Federico. If you want to just raise your hand. You sort of already answered this, Pablo. Sorry to keep kicking it a little down the road. Anyone else want to take a shot at that?
I can probably just take a quick one there. I think you want to make sure you show that you understand the startup ecosystem, because if you're not part of the ecosystem, you don't understand it. You don't understand the asset class at all, right? So from that perspective, having some knowledge about startup ecosystem is going to be helpful. But the most important part is, do you have relevant experience even in an adjacent space that you can bring to the table? Because if you don't have that, then you won't be able to convince your LPs. So that's something that I want to add.
All right, let's keep going. Oh, well, let's keep going. We got lots of questions, so I'd rather just get more questions than more answers, if you will. If you think about the team, roles, compensation, cash, and equity, or how do you think about the team when you're launching and running a new fund? This is a good one. And Pablos, you talked a little about team, so why don't we give that one first to you? And Oran, you also have a team, and Matt does as well. So we'll start with Pablos, and then raise your hand if you want to add to it. Okay, Matt.
I have one partner who's also a GP, and we work together. We have very complementary skill sets. That's helped a lot. And I think that for us, it's a good setup. I think, like I said, I think solo GP can be more efficient in a lot of ways, but we have we're building a bigger operation than some of the other folks. And for us, our team, a lot of what we needed was back-end support, and we get a lot of that from the VC Lab folks. So we've been able to kind of cheat at building a team by co-opting VC Lab. And then for the specialized help for things like evaluating certain technologies, we rely on our network for that. We do it on kind of a deal by deal basis. We didn't add venture partners to help with every deal the way a lot of funds do. But that's the choice that makes sense for us because we do such a wide variety of things.
Let me double click on that. The big strategy for new funds or new firms, both, is you bring on venture partners to fill, and they're compensated with carried interest, usually not salary, because new funds and new firms don't have a lot of money to pay people. But Matt, your shot.
Yeah, I really wanted to just double click on the team that is not permanent, so on the venture partners. So there's really a way that you can get more people excited, other people that have either connections with investors, know the space that you've worked with in the past, that can help you in terms of getting in contact with investors, sourcing the deals, and something that is not, let's say, on your payroll. It's more a collaboration on a success basis. And I think it's really important that you, with all of your team, try to really double click on what will make this a success in the long term. So, and everybody can get a shot at carry or shot at having a part of the upside if we all do our job great.
Oran, you also have a team, so.
Yeah, also I'll just add two things because I totally endorse what Pavlos and Matt was saying. The one thing is that I would say keep your team small in the beginning. You just don't need a big team right away, and you should hire people as the needs for people come up rather than hiring people and hope needs will appear for them, in my opinion. But the other thing that we don't really talk about, because this is sort of like dating, right? Where you think you look the nicest and everything's perfect. And but being in a venture fund is a 10-year plus marriage. And more importantly, being in a venture fund is, in my opinion, a really important, like you have to have a meeting of the minds with respects to values. And it's very easy for people to go off the reservation and do things that you may feel are inappropriate. And it's much harder to deal with those things after the fact than it is to make sure you're working with someone whose values align with you. So I would really recommend getting to know someone, understanding their values and their drivers, and if you have a longer term relationship with them, that's probably better. And just to underscore that, when we take money from people to invest, we're taking a lot of money. And I think it's really, in my mind, in terms of values, it's really critical to be a very judicious and appropriate steward of that money. We already have risk with respect to the investments. I don't think we should be introducing any more risk. So, I just think that's really important in terms of building a team.
I love that. And you'll be working with these people. You said 10 years. The reality is, in many cases, it will be 16 years. I look at it as like, if someone's coming on and partner in your firm, you will be working with them for 16 years, right? It could be 10 years on the early side, or it could be less if it totally blows up, which is a disaster. But think about it like 16 years. I like this question from Diego to all the panelists. If you could have the chance to start VC Lab program again, what would you do differently? I think that's like, interesting. Who would like, how could you maximize your experience? Okay, Pankaj, you want to take that?
Yeah, I think, you guys told us this really early, but some of us didn't do it, which was talk to as many people as you can, right? Go through your whole network, start talking to your old colleagues, your friends, founders that you've met, talk to everybody. Hey, I'm thinking about doing this. What do you think? That will help you kind of formulate your thesis faster. It will help you kind of right size your fund faster also, right? Like some of us might be thinking, hey, this is a really good size of fund that I should do. But once you start talking to people, might come back and say, well, maybe not, maybe I should resize this a little bit. So, I think going out and talking to as many people as possible early on, don't be shy. Don't feel like, oh, people are going to think I'm crazy to do this. Just get out there and start talking. Start with the closest people first, and then kind of expand outwards from there.
Pavlos?
I think this is similar observation, but if you think like for people who've been a founder, when I was a founder of a company and I was pitching VCs, looking back now that I'm a VC, I see like, oh shit, I did not know what I was doing because I didn't understand what the VCs business model was. I didn't understand their, incentives and I'd read about VC, but I just did not have a real sense of what they were trying to accomplish and how it worked. Now I know a lot more, and I'm sure if I was to, pitch VCs, I'd be a lot better at it. The same is true if you're going after LPs. Try to understand where they're coming from, what they care about, the other things they're doing. Oran talked a little bit before about how a lot of them, an LP is playing a completely different game than you. They have $1 billion to manage. They can't be thinking about 200K here and there. So they just have a completely different set of things that matter to them. And you want to learn about that and understand that. So when you're talking to them, you're offering them something that makes sense in the context of their worldview, not your imaginary one.
Matt?
Yeah, maybe just the last one as well is just really try to use it as a network, connect with other fellow co-managers, really reach out to them, get building relationships, use the network to your advantage, ask them for advice. You'll be able to share deals in the past, ask them for insights. They can open doors for you as well and cut some learnings for you as well. You're muted.
Oh, we're down. My microphone went off. Sorry about that. We're down the last minute here. There's a great question, number one rated from Krishna. And maybe we close on that. Before we close, though, please paste in the chat. There's LinkedIn for everybody here. Connect with them, okay? Connect with them on LinkedIn. These are amazing managers, and hopefully you can all forge long-term relationships. So Krishna was asking, can each GP share key benefit or benefits from their experience at VC Lab that helped them in their VC journey? And we'll go in order on this one. Oran, Pankaj, Maj, Sriram, and Pavlos. Oran?
So this is a really big question, and I think that I'll start by saying everyone who's thinking about putting together a VC fund who hasn't done this in the past should take this program or at least apply to it and hope they get in. I think that it really organizes your thinking, and it gives you, the program, the understanding of how to run a firm, right? I mean, we all want to run a firm. Oh, it's great, we'll have money, we'll find companies, right? And VC Lab isn't telling me how to look at a company and decide how to invest in it. VC Lab is telling me what my legal documents have to look like. How do I reach out to LPs? How do I, perform the functions that a venture capitalist has to perform so that I could do those other things? So I think that's probably the most important thing. And remember that you don't know what you don't know if you haven't done it. And because VC Lab is comprehensive, it makes sure you check every box. And I think that's really critical.
Thank you. Pankaj?
Yeah, I think Oran hit a lot of the points that I was going to bring up. But, having been a VC before and having done a lot of this in the past, I still think the VC Lab was invaluable for me. Part of it was because it focuses your energies on specific things in a very structured manner. And, in addition to that, you kind of get into the weeds on the operational stuff, which a lot of people may not have been involved with, even if you were a VC in the past, right? So I think there's, with that structure and also understanding the operational side is really critical to building a VC firm, not just a fund, right? So I tell everyone, like, if you're even thinking about it, doesn't matter if you've been a VC, you got a couple of unicorns in your portfolio, it doesn't matter. If you want to start a VC firm, you should go through VC Lab.
Yeah, really agree with Oran and Pankaj. It's really about the structure, really what you have to think about, the priorities, the focus, and it's really intense as well. So it's really not something that you could do as a part-time. Really do it if you want to do a fund. If you're thinking about it, maybe or whatever, probably you're not gonna finish it because really it's not as didactic. It's just like you learn by doing. You have assignments, you have things to do, which is actually talking with investors. It's talking, refining your thesis. It's really just pushing you forward. So in the end, it's also intense but rewarding. So you can really move forward and save time on that.
Yep. I want to add that, this is a program where you do and you have the experience. You gain the experience in the 4 or 5 months that you're going to be through the program. That's more important. This is not like a typical learning experience that you have in a school or a program for training. This is a program where you do and you learn as you do. So that comes, that gives you experience. So incredibly rewarding for me. And like I said, I probably, wouldn't have been able to do this myself, in any less time. The program really accelerated me closing on my fund and or the direction for closing the fund. So incredibly thankful for that.
Well, you do education and professorial work as
Yes.
well. So
At Stanford, at Santa Clara, so that's the tower that behind me. But
yeah, so you would know. All right, Pavlos, last but not least.
Yeah, I don't know why we have to sell this. It's a free program if you can get in. And then it pays off if you can keep from getting kicked out. So I think it just, if anybody told me they wanted to get into VC or start a new venture firm and they weren't trying to do VC Lab, I would be very dubious and try to convince them that they're being idiotic, because like I wouldn't be this far without VC Lab. And hopefully, I mean, we've said enough about it, but
yeah, I love you guys. Thank you so much. This was awesome. And here's what I'll say for everybody here. Again, connect with them on LinkedIn. This is their moment to shine. Their funds are, in a great spot. They're awesome people. You should definitely try and meet them. And I know there's a lot of questions we didn't get to. So here's what we're going to do. I'm going to talk with Mike, who works with me on VC Lab, the accelerator component. We're going to do another event as soon as next week. We'll do it AMA only and try and get to everyone's unanswered questions. And thank you so much, everyone. This was amazing. Thank you. What a beautiful event.
thank you so much.
Thank you, VC Lab. Thank you, Adeo.
Yeah, thanks for everything.
Thank you, everyone.
Yeah.
Bye,
Good
everyone.
luck, everyone.
Yes.